Hello, ladies and gentlemen. Thanks for joining us. I'm John Najarian, and it's my pleasure to talk with a guy that I get to talk with a lot, Tom Lee of Fundstrat, the co-founder of Fundstrat. And we're here at the Traders Expo, New York's Hilton, right on 6th Avenue, Avenue of the Americas, and 54th. So Tom, great to have you here, sir.
Yeah, great having me, thanks.
And for a change, instead of Scott Wapner getting to do most of the talking, I get to ask you questions about what's going on. But you always do a great job. We appreciate it when you come on CNBC, Tom. And I know Fundstrat, both institutional folks as well as retail, really get a lot out of whenever you come on and give us a little insight into what's going on.
Thanks.
So that's what I want to do right now for the folks on Facebook and on the website. If you could, tell us what you think as far as Jerome Powell and the Powell Put that's now back under the market. Actually, it's the first time he's put a put under the market, but he's clearly done that recently.
Yeah, that's right. I think, since he took over as Fed chair, I think initially there was sort of open question whether or not there was a put. Mm-hmm. And I think, last year in August, I think we got the sense that the put was dead because we were a long way from neutral.
Right.
And I think that really did affect a lot of investor confidence. I mean, I could see it from our direct interaction with clients. The sort of revised Fed view now, I think it is very good because I think it includes a rethinking of inflation, the inflation function, and the idea the Phillips curve is quite flat, which means the Powell Put's back. And yeah, it's a huge deal. It makes me start to think that maybe we've already reached the end of the tightening cycle.
That's what I believe that. I've said it, I believe it. I think that if we get one more this year, I won't be surprised, but I think that it's pretty much the zenith, the height of what we got to last year in 2018 might be the highest tick that we see out of the 10-year in a long time.
Yeah, and actually that makes sense, that there might be one more, but it might explain why the 1-3 curve is inverted. Because now I think the market thinks that we've ended the tightening cycle, and in a couple of years we may be having an easing cycle. So, maybe if that's the case, it's quite bullish for stocks.
Well, now tell me this, because you and I were chatting about what customers, what investors are thinking versus what the biggest investors, some of your big institutional clients, are thinking about. Has the market topped out? Are we end of cycle? And I think we get two different answers depending which group we're asking. That's
right. I'd say that for the folks who are letting the markets explain what's happening to them, so they look at sector relative strength, they kind of feel like that we're mid-cycle or we have a rejuvenation of the expansion. So I think there's a sense that this is very much like 2009. I think traditional macro managers who are focused on the curve kind of think we're late cycle. I mean, that's the market tension that I think larger institutions tend to think we're late cycle, and I think those who are looking at equity sector messages are much more optimistic. Right.
Well, I would maybe say that we've got private equity folks like Bill Gurley, for instance, over at Benchmark Capital. They told me years ago that Uber was topping out at a 12 billion valuation, and now we both know it's a lot more like a triple-digit billion, like 100 billion valuation. At least that's the way the market's perceptions are for Uber. Would you think that a lot of the folks that are so in it day to day, like you are and like your institutional clients are the ones that are more likely to feel that the cycle is ending rather than it could extend further out?
Yeah, that's right. I think unfortunately, large institutions tend to think old age makes us late cycle.
Because they have a lot of history and they have a lot of experience.
Yeah, and I think it's probably generally true that the longer the cycle lasts, the more likely we get a policy error or some type of shock. But I think it's a mistake to price the market as if it's late cycle. So I think, I agree with your observation. Like, for instance, in 20 years, we're not going to be talking about companies that are worth $1 billion. It's going to be how many trillion-dollar companies there are, right? So when you start looking longer term, I think that's the way to really generate alpha for an investor.
Beautiful. Thank you, Tom.
Yeah.
Folks, I've been talking with Tom Lee, co-founder of Fundstrat, You can always find great information from FundStrat, and I appreciate your time today, Tom.
Yeah, thanks.
Thank you.